Good morning, traders and investors. Steve Gans here with the Options Income Academy, providing another market update. And I'm going to share a trade idea with you a little later in this video. Now, these trade ideas are always, of course, for education purposes and paper trading to get people familiar with different concepts in the options world. So I want to start off by going through all of our various indexes. Of course, I always start with SPX, which is the index for the S&P 500. As I've noted in previous weeks, this has done a couple of things. One, this really long-term channel that's been in play for many, many weeks. Let me get my drawing tool working here. So this channel has been in play for almost 2 years, with the exception of we did drop out of the channel around those initial tariff announcements. Now we've crawled back into this channel in the S&P, and I think we're going to probably start resuming in the main body of this channel. Now, the other thing that's been happening is we've been building this wedge here. This wedge pattern has been forming on the way up. Many times, these do break out to the upside, which also is the thesis for putting this whole thing right back, traveling back and forth within this channel. Now, you'll also note here that volume is staying steady. On up days, we've been having more volume in general, although it is starting to even out a little bit. We're starting to have some of the down days are having some decent volume in them as well. So right now, I don't consider volume to be quite as much of an indicator as I do just the general chart pattern and the general movement in the market. All that said, there's a couple key things on our horizon here right now. Next week, we have what's probably going to be a pretty significant Fed announcement. Right now, I believe traders are pricing in a decent reduction in interest rates. If that does not pan out, I think we might be looking at a bit of some down move, or if we don't quite get what we are expecting. Right now, some people are expecting a 1/4 point drop, some are expecting a 1/2 point drop. So depending on where that lands, that could change this pattern a little bit, but we won't know until next week. And then there's also the pending government shutdown at the end of this month, which is also going to start to play in as we get a little later into the month and we see where that whole thing pans out. Now, all that said, right now, I am still in a neutral to bullish mode. And the reasons, again, why, or that's what the chart patterns are telling me. So now we'll look at SPY. SPY is going to be essentially the exact same pattern, of course. That's just the ETF for the S&P 500. And then ES futures are going to look about the same. I'm going to come back to you with a potential trade idea on SPY. Again, a paper trade or an educational trade idea. So this is the S&P futures. Again, I don't have all my lines drawn in here, but if I did, the patterns would look virtually the same. And then we have the volatility for the S&P 500. We can see that volatility is back here pushing on all-time lows. So there's just no fear in the market. There is no one buying insurance on their portfolios right now because they're not seeing that fear. Then, of course, we take a look at the Qs. The Qs are going to be a very similar pattern, but the Qs have stayed stronger through this entire thing. They've largely stayed fully in the channel, with the exception of that initial tariff dropout. Volatility on the Qs, very similar, very low volatility in the Qs, so no real fear happening there either. Then we take a look at IWM, as I had mentioned. In prior areas, I thought we were going to have a little bit of resistance here, which we did for a few days. We chopped around. Then we popped out of that. Now we popped out and we're not to these recent highs just yet. But I think what we're probably going to see in IWM is definitely maybe a sideways chop, possibly a little pullback to this prior support resistance line, and then a resumption of the up move would be largely my expectation on IWM. IWM also all-time lows in volatility. So not quite all-time lows. I guess we were a little lower way back in some of these areas. But again, overall, just a general low. They're to the bottom of the range. No real fear in the market on those. And then we'll take a look at gold, which I had mentioned a couple of weeks ago was forming also this pattern where I was expecting a breakout with some force. And we definitely got that breakout with some force. You can see the volume shot through the roof on that breakout. We've come up here now, and we're probably going to move a little sideways for a while, maybe even form another wedge here. And then often these things will travel in waves, and then it'll make another move higher after it forms a wedge for a few weeks. That's my expectations on the various markets. Now, about that trade idea that I mentioned to you. So let's come back here to SPY. And if we take a look at SPY, what again we see is we have a long-term uptrending wedge pattern forming here. And we also had a little bit of a breakout above that top of that wedge. It's not quite as forceful as what gold was, but I do expect the SPY to largely probably stay in a little bit of a range here and probably climb maybe a touch higher. So it's going to be in a little bit higher range, I think, because of that breakout. But really what I want to set myself up for here, if a pullback were to happen, I think a pullback near the tops of these areas right here, which again is around that probably 649, 650 area. I think that would be a reasonable pullback before a resumption of an up move. So if that's my premise, then I might look at doing a trade something like this. This is what's called a skewed iron condor. Now in this skewed iron condor, I am selling a 655 put. We're currently trading at 657. I'm buying a 647 SPY put. That's what gives me this side of this particular trade. That's basically a put spread that I am selling in this case. And then for the upper side of this skewed condor, I'm going to sell a 658 and buy a 661 call. That's going to give me this side of the condor. Now, a couple things to note here is that this trade has a 72% chance of profit. That's great, but a lot of that is because this entire area up here is above zero. No matter how high the market were to go, this trade would, in its current configuration, close out profitably with at least $28 in profit. So not a huge profit if the market rips up, $28 in profit, at least it's not going to be a loss. And that is part of what makes this chance of profit so high. Now, just to show you what I mean by that, if I were to drop this just a little bit to 662, now all of a sudden I have a $36 potential loss if the market gets up into this area, and my chance of profit dropped to 39%. Now, again, my chance of any sizable loss is not big up here. Maximum I would lose would be $36, but it significantly changes the chance of profit in this trade. So I did a video on chance of profit a week ago. If you want to know more about that and why that number it's a good number to have a sense of, but you need to fully understand how it's used, go back and take a look at that video and I dig a little deeper. But for right now, I think this is a good conceptual educational trade. My break even to the downside here is right around that 651 area. Again, if I take a look at a chart, my expectation is if we pull back here a little bit, that 651 is probably 651, 650 is probably a likely area for this to potentially bounce. And I may even, if I were actually trading this live personally, I would wait for a little bit of a pullback to that area, possibly a little test back down into that 650 range or so before I would put this trade on. By waiting for that little bit of a pullback, I would actually get higher premium here, which would give me an overall better profile on this trade. So to help everyone out with this, what I'm going to do right now is I'm going to save this trade and I'll put it as weekend update trade. And I will share this out with everyone. This is a demo paper trade. I'm going to copy this link. I'll share it in the description down below. You do not need to have an option strat account to make use of this. If you click on that link, it's going to open just like this within your web browser. Then when it opens, you can go in and play with this, or maybe set an alert to paper trade this, that when the market pulls back into that 652 range or so, 651, that you should look and see what this trade would be trading for at that time, and then consider adding that as a paper trade so that you could model it going forward. Maybe save this one right here, and then save a new one in that pullback, and you can actually compare the two going forward, see how they work differently if you get a little bit better entry, or maybe a higher value, a better reward to risk entry. So now those of you that are part of the alert service, let's take a look at the trades that are going on there. Last week, I closed out the 6th winning diagonal in a row. It was closed out for about an 8% profit in 4 days. That one was traded in rut, and the bid-ask spreads got a little wide there. So I actually closed that one out early, just so that I didn't get stuck in it with a big market move and the bid-ask spreads getting wider than I would like. Now, I've got 4 trades on in the alert service now, and I'm going to put a link down below if you're interested in the alert service, where you can see more about trades that I share live in real time when I put them on. I do a little video, not unlike what I've done here, explaining my reasoning for the trade, why I'm putting it on, etc. But it's important to note that right now, 2 of the diagonals are undergoing some pressure. They're pressure to the upside. These trades were put on, and it looked something like this. And then our market has moved up probably about 80, 90 points since that trade was entered. So I've had to adjust that trade. I've had to add another tent out here, expecting our markets to possibly decay or stay in this range for the next few days, so that this can recoup some of this current open loss, and possibly even get this back to a profitable trade. Now, theta is decaying at $200 a day. So if the market kind of treads sideways here, chops back and forth for a few days, theta is a theoretical number. It is not a number that automatically drips into your account every day. There's lots of things that go into calculating that, including volatility, the overall price of the market, etc. But in general, it's a guideline for what might happen. So if our market stabilizes, chops back and forth for 2 or 3 days, at theta going at $200 a day, there should be about $600 roughly that would come back into this trade, reducing the loss or possibly getting it too close to profitability. The same thing here. The theta isn't quite as high here. It's 163. But if our market stays in a general range here and we decay over a few days, I do think that both of these can get back to where they greatly reduced the current losses in them, or get back to some profitability. This is my butterfly trade, which has historically been my main go-to trade. Butterfly trade, I think, is a great trade. It's very easy to manage. It's very slow to manage. These are much more active in management. So the butterfly trade, this thing has had 2 adjustments in 25 days. There's never any real rush or pressure to adjust those trades. If you don't get to an adjustment on a given day, they're perfect the next day. So somebody that's working and may or may not be able to check in on their trades on a regular basis, maybe they can check in every 1, 2, 3 days. This is an ideal trade, this particular trade, the broken wing butterfly. I'm going to put a link down below for that too. I do have a deep dive class on the broken wing butterfly and a little bit of a freebie, if you will. So if you go to the link down below, you'll be able to sign up for kind of the freebie intro session on the butterfly. It's about 15 minutes, and it will help people understand how this trade moves, how it works, and whether or not it might be a trade that would work in your overall trading environment and the type of things that you're faced with on a daily basis as far as your time and ability to manage trades. Then I have the wheel strategy that I've been trading in PayPal, and that's currently up, although PayPal has pulled back here. And we've got 34 days left on this trade. If PayPal stays below 70, I may very well finally get a sign. But that was my goal. I wanted to own PayPal, and I didn't want to just run out and buy it. I sold puts, taking in premium each time I sold those puts in order to buy it. It's a little bit different strategy than just going out and placing an order. And this is the wheel strategy. And I'm actually going to put something on the screen here too. If you're interested in the wheel strategy, I don't really have a class on that. It's fairly simplistic, but I've got some additional information on it and even a cheat sheet you can download if that's of interest to you. So again, I'll put that on the screen here below as well. So with that, I'm going to close out the weekend update, everyone. And again, if you find this to be of use, if you find it interesting, please give me a thumbs up, a subscribe. Feel free to make any comments down below as well, as I always look in on those. So take care and thanks a lot.